Good morning, everybody. It's Wednesday, November 27th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had December corn up 2 at 422. January soybeans were up 6 3/4 at 990 1/4, and December Chicago wheat was up a penny at 540 1/2. This morning we had an export sales announcement from the USDA of 132,000 metric tons of soybeans to China for 24. Good morning, guys. We've got it'll be the last trading day here before we pause for Thanksgiving. Certainly with first notice day coming up on Friday, I think there's a lot of position cleaning up that's going on. So Ben, maybe give us a few thoughts to kick us off this morning, and then we'll throw it around the room.
Yeah, I think you make a great point, Dan. We have a big week of people having to move positions around price basis contracts, roll, etc. And we're condensing that. We're taking a day out of that with Thanksgiving. Yesterday was pretty heavy volume. We saw a pretty aggressive sell-off early. We recovered slightly overnight, but there's 2 more days now of that before first notice day to condense into one day. So kind of excited to see what transpires here today. We did move down below the 20 and the 50-day, and we briefly got below the 100-day moving average, and we recovered at the end of the day to settle just above it. So I think that corn's kind of at an inflection point here for a minute. How much of the trade has been focused on the December contract, and we've talked extensively about this period between now and Inauguration Day versus what's corn over the horizon. I think it's working those things out. Soybeans, you see a lot of people thinking that it's time for a seasonal bounce. I saw a lot of metrics that were posted that in X amount of years, and the average increase over the month of December was X. I think that we might be barking up maybe a tree that doesn't want to be barked up at the moment, but respect of soybeans, because a dollar move for them is, they'll catch you off guard and ruin someone's Christmas if you want to be on the other side of it. So we talked the other day also about, you don't want to fight markets during the holiday months. You don't make your year in December. You don't want to give it away in December by being stubborn. So I think today, probably some more of the same. I think that we see some pressure on corn. How much that pressure we see, if it can tick off some of the technicals and maybe generate some longer term players into thinking that the trend is flipped. So just going to today and Friday with a very open mind of what markets can do.
That's very good. Justin, any thoughts to piggyback into that here?
Yeah, if you think about 2 pivotal times during harvest, it's the September first notice day and December first notice day. So, markets are acting like you might expect going into first notice day. And I think that's, kind of goes around the whole talk about being careful on the holidays. You tend to make a low December first notice day. So when you have big crops, you make a low in September first notice day and then retest it in December. The thing that I've never seen before is that the lows are actually being tested with new crop contracts. So that wasn't on my bingo card. It's really interesting that we've put the back end of contract lows going into the end of the end of the month here, while nearby contracts are, at least in corn, are 30 cents above the lows. So I've never seen that before. I'm not sure it's ever happened. Maybe just I think there's a lot of different reasons that we could guess on why that's happened. But with the high interest rate environment, with a record crop, it's definitely very interesting that spreads have gotten so narrow with flat price staying so low. Other than that, yeah, I kind of want to be open-minded here going into the end of the year. I don't think it's a good time to take a really strong position.
Yeah, that's a good point. Anything else on the grain side, guys? I know we've kind of talked about majority of what's going on. I think just a couple of geopolitical things are going on. Obviously, they've entered into that ceasefire, which I think by all accounts is a good thing. To cool things down a little bit over there. And then
I'll add for you. I mean, I think the obviously all this tariff talk, this geopolitical talk. I think if you pair that with, if you pair that uncertainty with where, like new crop corn is, for example, we put this in our letter, but how close you are to PLC in some of these areas where you're starting to get, really big payments. I just feel like we may be at a, super low point here. If you look over, back in time, 6 months from now or a year from now, if you look, I don't think I've ever seen where you get new crop prices below government payments. Because you basically have a floor of PLC, and you factor in like these new crop insurance products that are going to be heavily subsidized. Not that that's maybe that becomes bearish. I don't know. I mean, back in the 70s and 80s, they had government programs where they try to support farmers, and ultimately became bearish because you couldn't ration supply because you kept growing it because you were below those numbers. But I haven't seen it since I've been here where new crop prices have been in the money, so to speak, on government payments this time of the year.
Yeah, and you bring up a good point. We're we're going to have a special edition of the War Room where we talk about some of these products that are coming out. We'll put some registration information and things of that nature into the show next week. But so like you said, Justin, these are things that we're looking at on a daily basis, and it's kind of intriguing this early in the year to be able to factor some of this stuff. And to your point, the corn matrix, I mean, there's ways making some assumptions that you can work through, what appears to be a kind of a hopeless deal right now.
Yeah, no, absolutely. I've never seen it before. So I don't know what that means. It's just very interesting. I mean, usually we're talking about this in, the summer, you buy crop insurance, you're deep in the money, you're getting double paid. I mean, the last time we talked about this was probably 2020. And we had, Trump type payments. We had, basically getting triple dipping in 2020 when we were making the lows. We talked about that a lot. This is different where no one's even planted yet. We're just wrapping up harvest, and we're talking about new crop being below major support levels, government payment wise. So I just haven't seen that before.
Yeah. Well, it's going to be interesting too with this lame duck session coming up, whatever comes with this Farm Act too. It kind of got quiet there for a little bit. And I saw some stuff earlier this week where they may be adjusting the payments a little bit, but that they're still trying to push forward with something. So we'll see what comes down the line there. That's good. Rylan, cattle, we got continued strength in cattle and hogs, and open interest in hogs is something special there. Why don't you go ahead with your rundown?
Yeah, no, I mean, the hogs are just defying gravity at this point. February got up to a new contract high, and commitment just continues to grow. I mean, it didn't seem like the market was phased at all by any of the suggestions of these, proposed tariffs, on Mexico and now even Canada. So overall, I think that could be a real problem down the road, but like the devil will be in the details. Right now, it just seems like the buyers have been really aggressive. Cash market has been really strong on the hog side. I mean, we're up about $5 here for the week. So, I mean, there's a lot of, demand behind this rally, obviously. So it just kind of feels like when it's over, it's over. So I just, at this point, just from a producer standpoint, it's like, this is a great opportunity. It's something that's coming contra seasonally. And we've seen this happen, in a couple different time frames over the course of history, but it's more of just like, hey, just can I protect myself? How can I lock in a margin? These are all good questions to ask, especially with the back end of the market being so hot. So I think it's good just to kind of look out there and see what's there just overall. But yeah, this tariff situation could get ugly. I mean, if there's no question about it. So I think just more and more will get rolled out in January, but I think that's the kind of time frame that most people are going to start to get nervous about something like that at least on the geopolitical side. And a cattle market, yeah, it's been pretty quiet. Cash saw a little bit of $295 for dressed in Iowa. I think the offers are around $189 in the South right now. So just judging by the strength and the beef that we've seen this week and just overall, just last week, maybe we see a continuation. Maybe Packers decide to pay up here just to get bought what they need bought just ahead of the holidays. So I think the tone is definitely on a little bit more of the firm side. It just feels like, you've got this massive amount of speculative open commitment, a lot of new hedging, I'd imagine, at these higher price levels. So I feel like the risk right now is that we start seeing some fundamental weakness that could shake some of that out. So just something to be cautious about. But right now, just haven't really seen any sign of it yet.
Okay, very good. Appreciate the update there. A couple things to point out. Markets will be closed tomorrow for Thanksgiving. We'll have a hard reopen Friday morning, 8:30 Central. We will have Friday's edition of the War Room at 8:15. That will include Brian's Fun Fact Friday. So everybody be sure to tune in as you're getting over your Thanksgiving holiday there. Appreciate everybody that tunes in on a daily basis. Throw us a like or subscribe if you wouldn't mind. Doesn't cost you anything to do so. It'll keep you up to speed on everything AgYield. So once again, we appreciate everybody that supports the show on a daily basis. We are doing this every day the markets are open, live at 8:15 Central Time, streaming live on X, Facebook Live, and YouTube Live. We hope everybody has a wonderful Thanksgiving, great day off, and we look forward to talking to everybody again on Friday.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.